Sahil Bloom opens the conversation with a look into the psychology and realities of wealth by dividing financial status into four distinct tiers: poor, not poor, rich, and mega rich. He emphasizes that breaking out of poverty into the not poor category produces the most significant uplift in one's well being, highlighting the tangible improvement in securing basic needs and enjoying modest pleasures like vacations or dining out occasionally. Moving from not poor to rich, defined typically as having a net worth between $1 and $10 million, Sahil explains that this phase often eliminates financial anxieties and provides genuine freedom to live comfortably without monetary worries. What makes his perspective particularly intriguing is his candid contention that becoming mega rich, accumulating wealth beyond the rich threshold, can paradoxically introduce unique challenges. These problems range from identity crises tinged with how money shapes one's sense of self to family dynamics that become strained under the influence of vast wealth. Rather than solving new problems, he argues that mega-rich individuals often create complexities that were absent at lower wealth levels. Ultimately, Sahil questions the societal obsession with the mega-rich status, framing it as an overrated goal that comes with hidden pitfalls. Sahil dives deeper into the trap many fall into as they climb the wealth ladder, describing how the pursuit of more money often becomes disconnected from genuine purpose or happiness. He stresses that money should never be the end goal, but a byproduct of building something meaningful and valuable. Through years of research and dialogue with people across the financial spectrum, from struggling individuals to billionaires, Sahil found that obsession with the later phase, the time when one believes they will gain freedom, purpose, or better relationships after accumulating wealth, often leads to perpetual postponement, or what he calls later becoming never. The solution he advocates is simple yet profound. Continuously ask oneself repeatedly, what is the money for? This question forces a reevaluation of desires and priorities, discouraging blind chasing of big numbers and promoting intentionality around lifestyle and happiness. Sahil shares personal stories and illustrations, like wanting money to create a drum room or spend unhurried afternoons with his son, as examples of aligning financial goals with life's meaningful moments rather than abstract numbers. The podcast delves briefly into the world of investment banking, a sector known for its grueling demands and high compensations. Sahil acknowledges the cognitive dissonance many investment bankers face. They pursue wealth in exchange for long hours and personal sacrifices, only to find that the money they accumulate doesn't guarantee fulfillment. He describes the phenomenon of Pyrrhic victories, where career success yields wealth but may coincide with personal loss, such as damaged relationships or burnout. This nuanced viewpoint reframes the typical glamorized narrative of investment banking, stressing the importance of reflection before committing to intense financial pursuits. Sahil suggests that anticipating these challenges ahead can help individuals build safeguards for their well-being and prepare their families, making the journey less destructive. Sahil contrasts the struggles of many mega-rich individuals with rarer examples of billionaires who have found peace and balance. Richard Branson is spotlighted as a paragon of building wealth without succumbing to the common pitfalls. The story of hosting a retreat on his private island underscores the intentionality behind his life design. He built his success while integrating family, health, passion projects, and freedom simultaneously. This example serves to remind listeners that wealth and happiness are not mutually exclusive, but require deliberate planning and values alignment from the beginning. Sahil warns that waiting to deal with non-financial aspects of life later will almost always backfire, since life circumstances change and meaningful moments, like children's younger years, are fleeting. Central to the entire discussion is Sahil's oft-repeated mantra. The most important question to ask yourself daily is, what is the money for? The podcast unpacks how this deceptively simple inquiry reveals deeper motivations and dismantles unexamined consumerism. Rather than fixating on getting more money, this question challenges listeners to visualize their ideal daily experiences and what money enables, rather than the money itself. Sahil illustrates this beautifully by tracing the spiraling reasons people give for wanting a nicer house, more space, guest accommodations, family memories, until it clarifies core values like family time, hobbies, or simply peace of mind. This framework encourages a focus on creating a life aligned with personal values rather than chasing wealth as an abstract endpoint. The conversation moves into debunking misconceptions about money making. Sahil stresses one core principle. Making money fundamentally comes down to creating value for others. This means solving problems and scaling solutions, not gambling on quick schemes or day trading. He highlights how many young people, influenced by social media, harbor unrealistic expectations about rapid wealth, such as envisioning $1 million income by age 30, without fully reckoning the effort, value creation, and perseverance required. Sahil's practical advice is grounded in real-world experience. Consistently increasing your value in your current context is a surer path to financial growth than speculative side hustles or shortcuts. He cautions that such distractions often drain time and cognitive energy that would be better invested in deepening proficiency and impact in one's main area. Sahil shares from his personal investing journey, openly recounting losses he has sustained in startups, NFTs, and speculative assets, balanced by long-term gains, such as in Bitcoin through buy and hold strategies. His reflections underscore the rarity of consistently beating the market, debunking popular myths that retail investors or casual day traders can reliably outperform broad indexes. He recommends that anyone capable of consistent outperformance should consider raising a hedge fund rather than private trading, pointing to the high barriers and the extraordinary competition among professional investors. Discussions also touch on controversial market behaviors, such as short sellers publishing critical research that may influence stock prices, illustrating how as long as conflicts of interest are disclosed, these dynamics contribute to market function. Sahil's measured perspective emphasizes transparency and market liquidity as core components of a healthy financial ecosystem. The podcast explores differences in wealth mindsets through generational lenses. Sahil highlights a stark contrast where Gen Z reportedly associates making it financially with dramatically higher income thresholds than previous generations, an expectation shaped by living through inflationary periods, expensive housing markets, and the constant spectacle of wealth on social media. However, he challenges the simplistic judgment that these attitudes reflect entitlement, instead pointing to structural factors that complicate wealth building today. He gives an example of a young employee openly expecting to earn $1 million annually within a couple of years, and how he explains the fundamental economic truth. Earning large sums requires delivering proportionate value, often many multiples over. This insight anchors the conversation back to the universal requirement of entrepreneurship and value creation, despite varying cultural and generational contexts. Sahil offers candid observations about hustle culture, describing his own experience working 80 to 100-hour weeks in private equity and emphasizing its effectiveness early in one's career when responsibilities are lower. Yet he recognizes the movement towards work-life balance and challenges the demonization of hustle, calling hard work a timeless ingredient in success. The balancing act shifts as life evolves, with family and health sometimes necessitating recalibration. He also reveals how compensation in private equity works, particularly the dominance of carried interest as the main wealth driver beyond salaries. This profit-sharing mechanism rewards long-term fund performance and retention. Meanwhile, the current debate over the carried interest tax loophole frames the complexity of public perception versus actual fiscal impact, with Sahil arguing that it is a minor factor in the national budget and unlikely to be eliminated due to political and financial influences. The interview touches deeply on practical financial behavior, where Sahil strongly endorses frugality early in one's career to build a cash flow gap, the difference between inflows and outflows, which fuels compounding wealth. His own story illustrates how disciplined saving and reinvestment during his 20s helped him achieve homeownership and financial freedom even before his carried interest income fully matured. Notably, he advises cutting expenses and living below means to maximize the fuel for accumulation. Emergency funds take center stage as well, with Sahil extolling the peace of mind they offer, allowing individuals to put the pedal down confidently through life's uncertainties. This safety net parallels the analogy of a Formula One driver trusting their brakes, enabling fearless speed elsewhere. His prescription for budgeting and expense delegation reinforces how practical money management and mental alignment reduce stress and free cognitive resources for impactful work. Sahil offers a thoughtful assessment of the housing market, arguing that in many U.S. cities, renting may currently be more advantageous than buying due to inflated prices and mounting interest rates. He critiques the societal pressure to follow a fixed script: buy a house, raise a family, buy luxury cars, and join social clubs. These expectations often push individuals into purchasing beyond their means, leaving them vulnerable when unforeseen financial shocks occur. The conversation expands into deeper insights about housing as an investment versus a home, where Sahil balances the purely financial calculus with the emotional and social value of homeownership. There's a recognition that owning a house creates joy and stability that's not easily quantifiable, yet meaningful in everyday life. However, Sahil cautions against ignoring the financial risk and advises prudence, such as not taking on leveraged debt for non-essential luxury items and ensuring a substantial cushion before committing to home purchases. Finally, Sahil discusses the nature of entrepreneurship, describing it as a path anyone can take, but cautioning that not everyone should. The true entrepreneurial journey demands full accountability, emotional endurance, and comfort with uncertainty. It is far from a glamorized social media portrayal, often involving late-night stress over payroll and survival. He distinguishes between Type A and Type B personality traits, suggesting that impulsive, action-oriented Type B individuals often outperform perfectionist planners due to a smaller gap between knowledge acquisition and implementation. This emphasis on action over theory resonates throughout the podcast, underlining perseverance and the importance of finishing what one starts as foundational predictors of success, alongside building genuine value for others.